Welcome everyone to Vested Interest. This is Shane back for another stock pick of the day video. Today we're going to take a look at Diageo. This is out of the consumer staple sector. This is Thursday, June 13th, so this will be the last one of the week. I do not do these on Friday. I do them Monday through Thursday whenever the market's open. Now, before we get too far in the video, if you could take a moment and hit that thumbs up button down below if you find any value in the content. Make sure you are subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Hit that notification bell so you're notified whenever we put out any new content. Again, I do these videos Monday through Thursdays whenever the market is open. I also do subscriber suggestions. So if you have a company you'd like me to cover in the Stock Pick of the Day series, go ahead and put it down in the comment section and I will try to work it in on a day that it pulls back. We'll see if it's presenting any value. And I really do appreciate everyone who's taking the time to do that. And a special thank you to all the subscribers out there. Over 950 subscribers now. The channel continues to grow because of people like you. And again, really appreciate it. Thank you so much. Now, this is the Vested Interest stock screener. This is how I set up the video. So we're going to run through this screener. At the end, we'll see if it meets 5 of 8. Now, highlighted in green here at the bottom, I do use price to book for banks and for insurance companies. Now, price to book you can use for any company, but don't use this 1. All right, for banks, 1 is fine. Anything under 1 being undervalued, 1 being fair value, anything over 1 being overvalued typically works fine for banks and for insurance companies. But for other companies like this one, or those in the information technology sector, consumer staples, other sectors, industrial sector, other sectors, you want to compare the company to similar companies in the same sector and then look at their price to book side by side. And that'll give you a better comparison on price to book. And then it would be 6 of 9, obviously. This is also how I look at a company on a high level to see if I am interested in investing. And if it does meet 5 of 8, or if it's a bank or an insurance company, 6 of 9, then it goes on to my watch list and I do more of a deep dive into the financials. So I look at the balance sheet, the income statement, and I'm looking at things like the debt to equity ratio. I want them to have less debt and more equity, or another way to look at that is look at assets over liabilities. I want them to have less liabilities and more assets. I want them to have growing free cash flow. I want them to have growing revenue. I look at their margins. I want solid margins and growing margins. So there are other things I look at on a deeper dive. This is just a high level screener. Out of the thousands of companies in the market, it's a quick way for me to look at a company and say, am I interested at all in doing more investigation into the company, or do I just want to bypass it and move on? So that's what this is really for. Now you can tweak this screener, and maybe you like revenue as one of them. Maybe you don't like that I look at 15% of a 52-week low. Maybe you're looking for 5-year lows. You know, you can use this screener and tweak it to your strategy. We all are different. We all have different investing strategies. Don't blindly copy mine or anyone else's strategy on YouTube. Make sure you are catering it to yourself. We all, again, have different strategies, different ages, different timelines for retirement. All right, back into the video here. If you want to know more about this company, you should go to www.diageo.com. That's www.diageo.com. That is their homepage where I pulled this information from. And what are they? They are a global leader in premium drinks, the most exciting consumer product space, right? So if you're going to a bar, you may be drinking one of their products, or if you have some drinks at home, maybe what you bought at the liquor store is one of their products. They have over 200 brands in 180 countries, so they are spread around the world, right? They're selling their brands all over the world. And to be honest with you, I didn't know there was over 180 countries in the world there. But anyways, the world's best-selling Scotch whiskey brand, Johnnie Walker, the world's most celebrated gin, Tanqueray, the world's best-selling premium distilled vodka, Smirnoff. So you're probably very familiar with Guinness, right? If you're a Guinness drinker, actually Guinness was one of the first drinks that I had whenever we stopped in Ireland on the way back from Iraq. The world's best-selling cream liquor, Bailey's. So you're probably very familiar with. And then if you were to go to their website, you could click on each one of these tabs. You could see what kind of Scotch whiskeys they have, other whiskeys, what vodkas they have, tequilas, gins, rums, liquors, beer, wine, no and low alcohol. For those of my friends out there in Utah, you know all about the no and low alcohol. And then some other southern states have what we call near beer. When I was out in Utah, would be low alcoholic beer. And then some of the states down in some southern states like Texas have dry counties where you might be drinking a beer that has no alcohol because they don't allow alcohol. That's what a dry county is. Maybe some of you are familiar with that sort of thing out there. Maybe some of you aren't, but those I've been around the country a little bit, so I am very familiar with those type of things. Like I said, whenever I lived down in Texas, there were places we had to drive into other counties to be able to drink, and then we bought all of our beer and alcohol on base because we didn't have to worry about the near beer out in Utah. They have a lower alcohol level for their beers and stuff there out in Utah, right? So anyways, www.diageo.com. Now, the reason we were taking a look at them, down 1.5% on the day. We are talking about Diageo PLC, ticker DEO, again, out of the consumer staples sector. And closed out the day at $131.37. 52-week range as low as $131.04, as high as $179.78. So they are right up against their 52-week low here. They have a market cap of $73.061 billion. So they are not really a small cap, not really a large cap. They're floating in that mid cap range. A beta of 0.34, so they are typically less volatile than the overall market. 1 being the market, anything under 1 being less volatile, anything over 1 being more volatile. Price to earnings ratio, PE ratio, $17.56 per share. I would like them a little lower, down in the teens. I mean, teens isn't bad. The overall market, I think right now is right around 22, 23, and it really is setting new records every week, it seems like. So it is less than the price to earnings is lower than the overall market. EPS, decent EPS on this one, $7.48 per share. They have an earnings date coming up next month in July 30th through August 5th. So either end of July or first part of August there. Tune in sometime in that week there. Forward dividend is $4.01. Now, this is going to be a little weird here. We'll see that here in a little bit. Some fluctuations in this. They are a semi-annual payer, so they do pay out twice a year. And then you'll see this company is actually based in England. So you'll see some of the fluctuations there that are around the exchange rates. So I'm not sure if their growth numbers are going to be exactly right, but they do show a 3.01% yield right now, which is a nice starting dividend yield for this one. Ex-dividend date is February 29th, so we're past that. They did pay out in April, so you would be in line for the next dividend payout if you were to buy them now, though it's going to be a while. They're not paying out again until the end of the year. Again, we'll see that here in a little bit when we look at their dividend stats. Now, Yahoo Finance, where I pulled this information from, they have a one-year target estimate of $155.18. I am not affiliated with Yahoo Finance. It's just one of the sources I go to for information. And we're going to take a look at dividend yield theory here. To do that, we're going to take a look at their 5-year dividend yield average at 2.25%. We compare it to the current 3.01%, or over here where it says forward annual dividend yield, 3.01%. And since it is higher, that speaks to undervaluation on this one, at least according to dividend yield theory. Right? So this one is potentially undervalued according to dividend yield theory. It is within 15% of its 52-week low. It's right up against its 52-week low. Payout ratio, I like 75% or lower, and they are at 52.62, so that meets the metric there that I'm looking for. We went over the ex-dividend date. And we're going to jump down and look at free cash flow. You want growing free cash flow for a business because a company does several things with free cash flow. They can pay down debt. They can make acquisitions. They can reinvest back into the company, whether that's expanding their brands, whether that's refabbing factories, that sort of thing. Maybe if they have storefronts, which this one I don't know that they do their own sales. I think they sell through bars and retailers. But if they were a retailer like that, they could be expanding their stores. That's what free cash flow is used for. Another thing that it's used for is buying back shares and paying dividends. And typically, again, if a company has growing free cash flow, they have growing dividends to go along with it. 2020 here, they were paying they had $1.9 billion in free cash flow. 2021, $4.1 billion, nice jump up there. 2022, it looks like a drop down, but we're going to talk about that here in a minute. $3.4 billion, and it looks like more of a drop in 2023 at $2.3 billion. But right here, the repurchase of capital stock, which is why I like to look at it. You can see here they were repurchasing with $1.9 billion in free cash flow. They repurchased $1.5 billion in shares. Down with their repurchase in shares in 2021, but up in free cash flow. $4.1 billion in free cash flow, down to $150 million repurchase of shares. Big jump up in repurchase of their capital stock here in 2022, $2.7 billion. So this repurchase of shares, even though it looks like their free cash flow went down, this repurchase of shares more than makes up for that drop in free cash flow. And the same thing in 2023 here, $2.3 billion and $1.7 billion in repurchase of shares makes up for. So I'm going to call this growing free cash flow. It would be growing anyway from 2023 to 2022. Not only are they higher in free cash flow, but they are repurchasing more shares than they were back here. So I'm going to call it growing free cash flow over the last 4 years. 2022 might have been flat a little bit because they did decrease their repurchase of capital stock and their free cash flow is down a little bit. But overall, I'm going to call it growing free cash flow on this one. If you don't want to put a check there, that's fine. Now we're going to jump over to stockanalysis.com, and I always recommend more than one source so you can make sure the information you're getting is accurate and up to date. I would recommend 2, if not 3 sources. These are 2 that I like. You pick any sources that you want. You don't have to use these 2. I'm not affiliated with either. These are just 2 sources that I like. Now, this one is not going to give us a lot of information. Typically, we see how many analysts are taking a look at this. They don't have any analysts that are looking at this, but they do call it a hold, right? They don't have a low, average, or medium estimate price on this because they don't have any analysts, so I don't know where they get the hold from. Maybe they pulled that from someone else, or maybe they're just guessing. I'm not sure. But this isn't going to give me much information here. We are going to jump over to statistics. We're going to look at return on equity and return on invested capital. I like 10% or better for this metric. Return on equity sitting at 47.8%. I like 10% or better, so that is almost 5 times what I'm looking for there. Very good number. Return on invested capital, same thing. I like 10% or better, sitting at 14.46. So that beats the metric there. That would be a check. EPS forecasted growth. I like 5% projected over the next 5 years or better. They're sitting at negative 17.64. I don't like that, so no check there. Revenue forecasted growth at 3% over the next 5 years. So they are showing forecasted revenue growth, though it is pretty slow. So this is one I'd watch. Let's jump over and look at their dividend history. Again, as I said, they are a semi-annual payer. So they're going to pay out twice a year. They pay out April and October. So if you were to buy them now, you would be in line for that October payout, but you're going to be waiting for it, right? So keep that in mind. They only pay out twice a year. Payout ratio, they're saying 49.29%. This is why I like to go to more than one source. Yahoo Finance had it at 52. If you split the difference, they're right about 50% payout ratio. Either way, it's under the 75% that I'm looking for. They say 8.46% dividend growth, so nice high single-digit dividend growth. I like that. Now, they also say there's only 1 year of growth, which I don't necessarily agree, but you can see here how the dividends fluctuate. Let's look at it real quick. 2019 in February, they were paying $1.36. 2019 in August, $2.12. So it looks like the early payout in April is lower than the August payout, right? $2.12, then February 2020, $1.43, August 2020, $2.20, February 2021, $1.53, August 2021, $2.48, February 2022, $1.57, 2022 in August, $2.27, March 2023, $1.52, August 2023, $2.50, and so far here in February, they paid out $1.62. So it does look like I'd have to go back in time, and you would have to do the same and figure out what the exchange rate was in funds here, right? England uses the pound, if I'm not mistaken. Correct me if I'm wrong down in the comment section below. So you'd have to do that exchange and see, is it the exchange rate that's making things distant? It does look like at least the February payout, which would be the April payout here, is rising, $1.36 to $1.43 to $1.53 to $1.57, down in 152, but that could be the exchange rate up to 162. So you'd have to do the math and go back and look at where they were at as far as the exchange rate whenever each one of these is paid out. They're either holding it steady or they're slightly raising that early payout. So I'm going to go with the dividend growth here and give them a check for that. They do have buyback yield of 2.33%, which is nice. If a company is buying back shares, you want their buyback yield to be positive so that they're not buying at the top end, which usually means if it's negative, that means they're not getting a very good return on their buybacks. They're buying it whenever it's expensive versus buying those shares back whenever it's presenting more value. Shareholder yield, 5.47%. We went over the payouts over the years. Again, April, October, so semi-annual payer here. Let's look at the screener here, see how it does. So we started with understanding the business, check there, growing free cash flow. I'm saying yes there, growing dividend. This one, if you didn't want to put a check because I haven't looked at that, you could take that one out. Dividend payout ratio of 75% or less, definitely a check there. It's 50, right around 50%. Check valuation based on dividend yield theory. Dividend yield theory says it's potentially undervalued, so check there. Buy below current cost basis or within 15% of a 52-week low. It's not in my portfolio, so the buy below current cost basis does not apply. It is definitely within 15% of its 52-week low. It is right up against its 52-week low. If it goes much lower, it's going to set a new 52-week low. Return on invested capital and return on equity, 10% or better, check there. Now, it did not have forecasted growth of 5% or better, so no check there. So even if you took out the growing dividend here that we looked at, 1, 2, 3, 4, 5, 6, 7, about as good as you can get. If you want to take out that one, that would be 6, or I'm sorry, right here, if you want to take out the growing dividend, that would be 6 of 8. So it definitely would make it on my watch list. It is on my watch list. Right now, I just added Starbucks. So I'm kind of going through my watch list right now to see if I'm wanting to. A lot of my positions right now are pulling back. So I'm not really looking to add a new position, but I am going through my watch list right now to see when I am ready to add a new position, which one it will be, right? So Diageo, what do you think of Diageo? Is it in your portfolio? I believe this is one in Warren Buffett's portfolio, so it's a Warren Buffett approved company here. Usually, even if we have a pullback, people aren't going to cut back on alcohol. Usually, even if we do have a recession or hard times, people are still buying alcohol. For whatever reason, people still buy alcohol and cigarettes, it seems like, even whenever things are going bad. They might be complaining to your face that they're poor, they're broke, they don't have any money, why they have a beer in their hand sitting at the bar. That's just the nature of humans in general. I don't understand it either, but that's just the way it is. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. You can read through the rest of this. It's getting a little long there, but this is my disclaimer. Again, not a financial advisor. Don't just blindly copy me or anyone else on YouTube. Do your own research.